Andrew Keene, president of KeeneOnTheMarket.com, joins us now for Chart Talk. It's a big day in your life. The Apple developers are getting together.
Yeah, they're presenting the keynote address at the WWDC, which would be very, very interesting. These are always, very hyped up at what Apple's going to say, what they're going to come out with, what they're not going to come out with, if they're going to talk about new products in the line, if they're not. They're a very, very hush-hush company, so I don't think they're going to talk about a lot of the products that they have down the pipeline. But the new one's going to be the MacBook refresh. They're doing redoing all their MacBooks. The rumor on the street has it, and they might do all their computers as well.
You have been watching this stock and this company forever, it feels like. Do you think we'll hear anything about the iTV or iPhone 5?
I do not think so. I do not think we're going to hear anything about the Apple TV or the new iPhone. I also heard rumors about a mini iPad, or also about getting Sirius on the iPad. Sirius actually hasn't worked out as well as Apple anticipated. So even if they come out with Sirius in the iPad, supposedly that's going to be the new version of the iPad will have Sirius in it. I think if none of these are mentioned, the Apple TV, the iPhone, or the iPad mini, the stock will sell off. Usually Apple has a history of running up into events, then being a little bit disappointed on the event, and then selling off.
How are you positioned, and what's the best way to make money on Apple this week?
Well, I have a bearish position on. I put it through a put spread. I'm always long Apple, right? I always talk about how I'm long Apple. So I'm actually short Apple. This is counter trend. So I bought the 570, 555 put spread. So I start getting short the stock at 566 half, and my maximum gain is under 550. And I think Apple will sell off. Even if the market sells off, Apple will sell off with it. But this is counter trend. So I bought this spread for $3.50. It can be worth $15. So it's giving me a 4-to-1 risk versus reward payout. So if Apple does go higher, I'm only out this $350. I never want to short stock. I especially don't want to short stock naked in Apple. If it pushes through the 50-day moving average at 585, climbs higher to 600, I know my risk, I know my reward. The most I can lose is $350 per one lot.
That's your near-term play. How long before it breaks through $600?
Well, that's interesting. It's going to be where the market moves. They have earnings in July, so I think July will be the next catalyst. This is a big catalyst for WWDC. If something comes out with Apple TV, or they say it's going to be out this year, or the iPhone's going to come out this year, the Apple could rally a lot higher. And if it goes above 600, the high of 641 is placed in. They're going to have good earnings. I'll probably put on a huge bullish position on the earnings, but that's not until the next catalyst is in July.
Andrew Keene, president of Keene on the Market. Thank you, Andrew.
Thank you.